Vixen Tech down 5% on the back of its fourth quarter numbers. Profit and revenue meet estimates, although FY25 revenue below the company's 40,000 crore guidance. The management tells CNBC-TV18 they expect 40 to 45% revenue growth in FY26.
Torrent Pharma climbs closer around 3% after the India business revenue rises by 12% on a year-on-year basis, while the US sales also come in better than expected. Brokerages, Citi and Nuvama, they issue buy calls on the stock.
Good performance from Dredging Corp. The stock rallies more than 13%. We have the revenues that climbed 66% and the EBITDA too rose significantly.
On the other hand, Asset DM slips closer around 3% despite an operationally good performance as the company reports a 5% revenue decline on a sequential basis.
Titagarh Systems rallies more than 5% on the back of stock coming out of F&O ban.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. Well, Mangalam, markets booming away.
Markets booming away. So let's get you some ideas for profit. Coming in from our colleagues at Money Control Pro today, we have colleague Neha Dave joining in with a stock. Neha.
Today's stock idea is State Bank of India. SBI saw a strong finish to FY25. The country's largest bank reported its highest ever annual profit of over rupees 70,000 crore in FY25, a growth of 16% YOY. The profit growth was aided by healthy loan growth, controlled operating expenses and contained credit cost even as margins contracted. Asset quality improved further and very low credit cost continues to surprise positively. Overall, the operating performance was strong and SBI delivered return on asset of 1.1% in FY25. However, the return ratio seems to have peaked. Margins will come under pressure due to potential further rate cut. Cost to income ratio improvement will be very gradual due to cost rigidities. With credit cost already at lower level, there is a limited scope of further improvement. So then what will drive the earnings going forward? The biggest cushion to ROA in FY26 can come from treasury gains with softening of GSEC yields. Moreover, the management has guided for a loan growth of around 12 to 13% in FY26. SBI has taken enabling board resolution for equity capital raise in the coming year. However, the stake sale in Yes Bank will give the cushion in the near to medium term. In terms of valuation, the stock is trading at around 0.9 times core book value after adjusting the valuation of subsidiaries for FY27. And this valuation is very attractive given that return on asset is above 1% and return on equity is 19% and offers a favorable risk reward. While the earnings growth will normalize, the stock upside will be driven by expansion in valuation multiple.
Got that. Thanks, Neha, for joining in and giving us, the analysis on that stock. But let's focus on Hindalco. I discussed the numbers with Mr. Satish Pai, the managing director of Hindalco earlier today, and began by asking him about the aluminium prices and whether or not there's a deficit in the global aluminium supply. Let's listen in to what he had to say.
The aluminium market worldwide is finely balanced. It's a plus minus 100 KT market on a 77 million production of aluminium that happens. So it's true that the market is very tight and hence the aluminium prices are trading in a band of which I've always maintained between 2300 and 2600. So depending on how the general economic macro environment works out, the aluminium prices can very quickly start to trend upwards because then market sentiments improve. Or when the uncertainty is there, it trades at the lower end of that band between 23 and 2400, which is what we have seen in April and May.
Mm-hmm. All right. But do you believe that by the first half of this year, we should see aluminium move towards the higher end of the band? That's around $2,600 per ton. And also, if you could give us your take on alumina prices, because that hit a low of around $330 per ton, and that quickly has bounced up because of the fear there's going to be a bauxite shortage with what's going on in Guinea. What's the outlook on alumina prices?
So, see, alumina is, as you said, very much dependent on what happens in one country, Guinea. Because Guinea is a big supplier of bauxite, both to China, Middle East, and everyone who's short of bauxite. So the volatility in what happens in that country has a big impact on alumina prices. Traditionally, alumina prices have been in the range of $350 to $400. But when there is a problem in Guinea and bauxite cannot be moved out, it jumps to $600-700. So I think that the volatility in the alumina prices is here to stay because of what happens in Guinea.
Got it. Okay, sir. Before we get to your segmental performance, some part of the street is calling out that this was the peak performance for Hindalco for the next few quarters. What is your comment on that? Because you had everything working, right? Aluminium prices had perked up. Alumina prices as well did move up in Q4. You got the benefit of higher prices. The rupee was weaker. And now some part of that has reversed. So would you believe that Q4 is peak and now we'll see more subdued set in Q1 and Q2?
So the way I look at performance is actually a bit more simpler than that. I think that a company should focus on what it can control. So we focus on our operations, safety, quality, keeping our customers happy, and producing both aluminium and copper for the market. I think the top line, as you very much know in our business, is decided by macro forces like LME prices of aluminium and copper. So I personally believe that peak performance means maintaining our operational excellence at the level it has been for the past so many quarters. And I'm quite sure that that peak performance of operational excellence can be maintained.
Interesting. You know, because I'm looking at the business on a per ton basis, upstream are doing $1,700 per ton, which is fabulous. Do we work with a little bit of a lower number if you want to give us a range on a per ton basis?
So I think that, again, I'll repeat, I cannot sit here and predict what prices will be on a month-to-month or day-to-day. What I can assure you is that we will be producing at a very good cost of production with the right quality for the market.
Okay, let's finish the India business then. Copper, you've been telling us realistically, the number should not be that 700 crores, 800 crores per quarter. This time around, it was closer to around 600 crores per quarter. Looking at the TCRC spreads as well as the value addition, do you think that on a quarterly run rate, this is what you will be looking to maintain?
Yeah, absolutely. I think that the 600 crore per quarter is the run rate that you will see for this financial year, largely because, as you said, TCRCs have dropped dramatically. But, you know, we are supported by the value chain of copper, the downstream of copper that's coming in place. So our guidance of 600 crores a quarter for copper, we maintain for this financial year.
Okay, all right. There's one more aspect, Mr. Pai, that I wanted to understand. Because of this entire trade tariff battle, you all have already guided the market that there will be a hit of close to around $40 million on a quarterly run rate. My question to you is, if in case this gets sorted out, then I guess you'll save some part of that $40 million per quarter. But also the Midwest premium that moved up from around $450 per ton, that moved up all the way to around $900. Is there a risk that that comes down if in case this trade war comes to an end? So how do both of them offset each other? You get a benefit because of the import, but however, the premium as well will come down. So how do these stack up against each other?
So look, net, what happens is that the 25% premium that's there on most countries is what's built into the Midwest, and hence the Midwest went from $400-500 to the $800-900 that you see today. So I think that if the 25% stays on each and every country, then the Midwest premiums will stay at those levels. But what is probably going to happen is that different trade deals on a bilateral basis will be struck. The UK-US was the first one, and we are hoping that India is going to be the next one. So I think in the coming months, you're going to see a lot of trade deals being struck. The net exposure of Novelis today is Canada. So we are waiting for the MCA 2.0, which is the Canada-Mexico-US deal to get settled out. So if that does get settled, then we have net, I go back to what I used to say the previous quarter, neutral to slightly positive impact on our business.
Got it. Okay. All right. Yeah, that's the hope out there because, you have said that in the past as well. It'll be neutral to mildly positive. Got it. What about CapEx plan for this year? What is the amount? Because for the next 2 years, we are building a higher CapEx number. So what is that number? And what does it do to your debt number? That's come down because India's net cash, there was some working capital release as well, which has contributed to this net debt number coming down. But how do you see both these two pan out, CapEx, debt?
So on we did an investor day in the first week of April, and we announced a broad strategy which we call doubling down on upstream and taking the downstream EBITDA to a 4x. So the downstream investments have been done in the last 3 years, And we are now embarking on a 45,000 crore upstream capital investment program. So a new alumina refinery, a copper recycling plant, a copper smelter, an aluminium smelter. So the next 3 years are going to see a big upstream capex program. Our capex for this current financial year, FY26, is 7,500 to 8,000 crores. And over the next 3 years, we'll be spending that 45,000 crores. Now, we have, as you said, a very strong balance sheet in India, and we think that we can do this capital program without going above our net debt to EBITDA guidance, which in India is about 1 to 1.5. We will not breach that.
Final question, sir, on Novelis. What could be the broad range on an EBITDA per ton basis? For the year, if you tell us what could be the lower end and what could be the upper end?
I think I'll tell you that our target is to get Novelis consistently about $500 per ton. And we hope that during this year, especially in the second half, we'll get there.
Okay, all right. Well, the markets, by the way, are still holding with a gain of around 240 points or thereabouts. That's Novelis's big takeaways out there. Copper will be maintained at around 600 crores per quarter. Aluminium prices should be in the vicinity of around $2,300 to around $2,600 per ton. And they're hopeful that there's a favorable agreement between the United States and Canada because they source some part of their raw material from Canada, which in that would be a neutral to a mildly positive event. For the time being, we'll slip into a short break. On the other side, we'll be joined by the management of Zydus Wellness. Stay with us.
What a strong move we're seeing in the market right now. A lot of the stocks which had opened lower are now recovering at the high point of trade for Bajaj Twins, Bajaj Finserv and Bajaj Finance. We also have an up move that we're seeing on Trent, opened on the back foot, currently at the high point of trade. But the stock on our radar is Zydus Wellness. The company is reporting an overall good set of numbers, revenues climbing 17%, margins also at around that 21% mark itself. Tarun Arora, the CEO and director of the company, joins in to discuss the numbers in detail. Tarun, the important part, what happens to your summer portfolio, is what everyone on the street wants to know. On the back of that, what's your guidance for this entire year? And if you could break that up in terms of growth coming in from your foods business, your nutrition business, and how much comes in from your personal care business.
Thanks for having me, Mangalam and CNBC. We've had a good 2025 financial year, and we do believe that we are up for a continued double-digit growth journey into FY26 as well. We've seen a bit of rains in some of our markets of East and in the April, and May has also seen something in North. So may impact the party a little bit, but we still stay committed that a double-digit growth is on.
So when you say double-digit, what do you mean? Because the last time you said that 15% mid-teens is the revenue that you can actually do. You've done about 16% in the entire year. So with the offtake problems that you have in the first quarter, what does double-digit mean? Should we look at more like 10 to 12% or maybe 12 to 15%?
I don't have a specific number, but I'm clearly hopeful of early teens upwards, but it may swing a little bit here and there depending upon how eventually the whole quarter goes by and eventually what we can catch up on.
All right. Hi, Tarun. Good to have you on the show. Nigel on this side. As of now, the margins that you've reported is close to around 14% approximately. Yes. But you all have indicated that you want to head towards 17 to around 18%. Give us the glide path. How do you see the improvement on a year-on-year basis?
We believe that a fair number is 17-18%, and it'll take us probably about a couple of years to get there. One clear driver for us will be consistent focus on driving our gross margins up, which should give us a good 1 to 2 percentage points upward movement. If we stay on the path to what we are looking at, a double-digit growth journey over the next couple of years, that should also translate into operating leverage, which should also help us there. So these are two fundamental drivers. Of course, we constantly remain focused on better operational costs and delivering better margins.
Right. Early teens revenue growth, better margins over the next couple of years. I just wanted your view on how the portfolio grows, because in FY25, food and nutrition, which accounts for, I think, about 75% of your revenues, grew 13%. Personal care grew 33%. What's your prognosis for, both these segments for the next year?
So my view is that personal care, we have hit something fantastic. Both our brands, Nycil and Evyouth, have been on a good run. We believe that this is something more systemic to the brands. The equity of these brands work very well, so they will continue to drive us in the same zone. Whether what number will play out, but a high double digit is on the cards. Food and nutrition portfolio is also doing rather well. There may be some challenges on summers, but there are so many other brands which are on a consistent growth journey, whether we look at Nutralite, which is dairy and spreads, our new acquired business that we've got, which is Max Protein. That's also seen over last 4 to 5 years. Before the acquisition was about 25% CAGR. We have seen a much higher numbers, like almost 40-50% plus in few months that we've owned. So we believe that's also going to be on a good tailwind to build us up. Our sweetness portfolio is building rather well, including new launches of sugar-free delight. Our Light portfolio is gaining. So we believe both the parts have good momentum behind it.
I was just trying to understand what the delta between the two would be, because last year the delta was 3:1. This business, personal care, grew 3 times the pace of foods. So what the delta between that should be in FY26 and beyond. And you spoke about Max Protein growing at 40-50% CAGR. In absolute terms, what was the revenue that you did in FY25, and what can we expect in FY26?
No, not a CAGR. CAGR has been more 25-30% before the acquisition. It's since acquisition we got those numbers. We believe 25-30% is what we believe this acquisition will continue to deliver on. Right now, last 5 months have been more exciting. Talking about the delta between the food and nutrition and personal care, I believe personal care will continue to drive a little faster than the food and nutrition, but food and nutrition is also catching up. So I won't say a 1:3 is really on the cards. I would be happy if it is a similar zone, but 1:2 is also more exciting, but no specific numbers really.
All right, Tarun, MFD, milk, food and drink, as a category that's facing challenges. What's the strategy to grow Complan?
So yes, this nutritional beverages or HFD, whichever way you want to call it, it's faced a little bit of headwinds, largely because of fatigue in the category. There are spaces which will continue to move faster. We've seen some new additions in the consumers in the digital space. There are some new brands which have come up in digital space. So we do believe that making it more relevant to the new age consumer remains one of our core tasks. We're looking at new formats to also deliver. So the way we are going to build this category or recover growth in this category, which itself is a big challenge for us, is to play the whole segments. We were largely a kids play. We've launched adult nutrition through VMAX. We'll have probably more expansion around it. We already have a toddler place with a Complan Nutri-Growth. We are also looking at few more formats and segments to play in. I think it's just keeping the brand more relevant for today's consumer who's seeking more than just the regular nutrition that they've expected from this category. And maybe the sugar story has been extraordinarily highlighted. The kids need some bit of sugar. It's actually required some bit of energy. So building newer segments and making it more relevant to the new age consumer is how we believe it'll get its growth back.
I asked you this about the last time as well. Your intra-brand synergies. You have on the one hand RiteBite, on the other have Complan, and then you have sugar-free as well. I mean, just club all of them and bring out a product, right? Everyone would want something that fortifies their milk without any sugar and a high amount of protein.
So you're bang on. I think if we really look at it, our claims, our way of working has a huge amount of synergies. It's just that the cross-brand consumer claims may not happen. So I have Max Protein, no added sugar products. I've not put sugar-free because there are a different set of consumers having a different set of associations with each of these brands. So I will keep those separate for now. there are some one or two opportunities which we'll explore. But when we are putting these brands together, the platforms we are putting together, there's a lots of synergies, and we are seeing a good value out of those.
Just a final
as
question before,
backend.
right? Just a final question before we let you go. Your update on distribution reach. Where are you at right now? E-com and Q-com penetration. What does that mean in your overall mix right now?
Yeah. So overall, modern trade plus e-com, digital commerce contribute to almost 23-24% of our business at a current run rate, of which 10% comes from 10.5% comes from the online space, of which 40% is quick commerce. So quick commerce is growing at a breakneck speed. It's becoming more and more relevant for the urban consumers. When I go to GT, which is the bulk of our business, like any other FMCG, that is about 3 million outlets that we reach. Our desire remains to cross a 4 million numbers, and we're moving towards it. It will be more driven by smaller population towns, rural, where we are continuing to expand and put more energies behind it. So across channels, we're seeing a good traction for our business.
All right, take that point, Tarun. Thank you so much for joining in and giving us those outlook. As a consumer, I think Nigel and I, we grew up on Glucon-D, and now as we age, we perhaps will move towards the sugar-free products that they make a lot more. Thank you once again.
Also try Max Protein. It's
Complan
very
as
good
well,
for you.
right?
Yes, we do try Max Protein, but my grouse with that is it has a lot more calories for the protein that it provides. So maybe that conversation another time. Complan, yes, Nigel, we grew up on Complan too.
Grown up on Complan as well.
Complete plant food. All right, Tarun, thank you so much for joining in. We take a short break, come back, get you more on the markets and a lot of stock-specific action on the other side.
Welcome back. As you can see to the top of the screen, all the frontline indices are doing very, very well. Whether you look at the Nifty Bank, Sensex, and even the mid-cap index. It's a good start to trade, but we have run out of time on this edition of Chartbuster. Stay with us, though. The team of Trading Hour is waiting for you on the other side.